Good evening, folks. This is ICT with the Inner Circle Trader Pro Traders Club, entry for February 23rd, 2011. Okay, what we're looking at presently is a cable chart, British pound versus US dollar. And what I wanted to discuss tonight was looking at a chart like this. This is a 5-minute chart. If you're new to Forex trading and or technical analysis, this could be a little overwhelming for someone looking at it. If you were to look at this and wonder, is there any symmetry to any of this? Is there any rhyme or reason? I can tell you as a trader, when I first started looking at technical charts, they were, I gotta tell you, they were a mystery to me because I couldn't discern how anyone could make anything out of these lines, these dips and these valleys. And what I wanted to go over is looking at a chart like this. It's very easy to be lost in the chaos if you don't have reference points. And that's the basis of the tools that I've shared thus far. And it allows you to map your terrain. As a sniper, you want to be looking for kill zones, and you want to wait for time and price to come together. In other words, when time and price meet, there's where your opportunity lies. And trading outside of those parameters is basically trading in no man's land. So you want to be looking for an opportunity to trade at or near the open or close of a session. And by doing that and looking for key support and resistance levels, that allows you to find very consistent, very reliable trade setups. And let's look at this cable chart with a little bit more professional dimension added to it. Okay, now suddenly the same chart doesn't look so confusing. We have the vertical line here delineating a midnight New York Standard Time. For me, it begins a new trading day. Market opens up in this area here, trades up to R1, flirts above a little bit, and then trades back down. Okay, I have a key institutional level 161.80 delineated on the chart, and R2 up here. Okay, and this box here, I have highlighted the window for the London Open. Okay, and are using the same parameters, 2 a.m. to 4 a.m. Eastern Standard Time. And for GMT, that's basically 5 a.m. GMT to 9 a.m. GMT. So basically, I have it set up where I can look at this window and just imagine seeing the lines go up here, because I like to have my charts very pristine, very clear. I don't like to have a whole lot of lines on it because I'm studying price, and I don't want to study static lines so much as I don't want to put too many things on a chart to clutter it up, number one. And to me, it's very easy to get distracted by having so many things on your chart. So with the fractals placed on here also, you can see where important swings are unfolding and how the market trades from fractal to fractal. Okay. Up here we have the New York North American Open, and that is 7 a.m. to 9 a.m. approximation. And Down here, we have the London close window between 10 a.m. and noon. Okay? And all we're doing is imagining, without having to draw vertical lines right from the edge of this box up, and as well for here. So we're blocking in an area in terms of time for a session. Same thing in here. We just imagine a vertical line straight down from this edge of this box. Same here. Okay. So there's a lot of different ways you want to look for one that's comfortable for you. Previous videos we used tiny little trend lines drawn from the edge of the chart. You can use anything you want. I mean, if you're comfortable looking at one of these boxes completely drug over the entire chart, it's purely up to you. I mean, if you're okay that you won't be distracted by something like that laying over the bars of your candles, by all means, do it. But basically, these are reference points in terms of time. So hopefully, as a patient trader, which is what you're trying to strive for and working towards in your development, if you did not take a trade in the London Open, okay, and we're in this area in here, what do? You wait. You don't do anything. When's the next window of opportunity for high probability, low risk opportunities? The New York Open. So you just wait. Sure, this trade here could have really been handsome if you would have caught it. Could you have done it? Sure. Looking at Singapore close and all that, sure, you could have done something like that. But we have to be realistic. We want to be taking trades only when the parameters are in place for a low risk opportunity. So again, we are in no man's land in terms of missing the opportunity that was in here. We'll go back to that in a second. Price trades up into R2 in this level here, inside of the New York North American Open. Let's look at the London Open setup that unfolded this morning. Okay, price opened above the central pivot. It's not on the chart here, but it is opening above the central pivot. Trades up to R1 and trades back down and retraces and bounces up again. Pulls back one more time. Now this is when we can look for the pivots to kind of like reverse their role a little bit. In other words, even though we are in the sell zone, you have to look at what the daily chart I suggested for the last several days. I've been telling you that the daily charts have been trying to reach for higher highs. Okay, so using that as our premise, that is where the market is trying to get to. So the low risk, high opportunity for profit is basically going to be found with looking for trades when the market flow gets in sync with that. Okay, I think that's what's really been tripping a lot of the traders up that have been trying to utilize market flow. And by that I mean, let's look at an example. For instance, right here, let's assume and again, this is a 5-minute chart, so don't be thinking you need to be doing this on the 5-minute chart all the time. But I'm just going to show you how market flow can throw you off if you're not using the big picture. All right, we have a fractal here. Okay, price broke down below it. Okay, so that would make market flow down. Made another fractal low here. Price broke down below it. Okay, so in this general area here, one might be considering what the market flow being down, right? So what's that mean? Look for sells. Well, that's not feasible here. Okay, because we can see the price didn't go lower, and in fact it actually made it low and it reversed. Okay, and you can get beat up basically by utilizing market flow and demanding too much from it. Okay, so you have to use your higher time frames, monthly, weekly, daily. See where the market's trying to get to on these longer term time frames, because a 5-minute chart, 15-minute chart, even a 1 minute, 1 hour chart can be contrary to what the underlying trend or long-term macro view of where price is actually trying to get to. So you want to look for times when market flow is in sync, okay, with that long-range view. And I think when you do that, you'll see that your trading becomes, a lot easier. Number one, it'll be more consistent. You'll see your trades move faster into profit, covering the dealing spread a lot easier. And overall, it'll just allow your trades to be more dynamic and much more profitable. Will it guarantee you'll always be right? Absolutely not. I'm still working on that. That's my goal, is to get it where it looks as close as perfect as possible. But yeah, that still evades me, and I'll never get that. I'll be honest with you guys. I'm just teasing you. But basically, since daily has been trying to reach higher, when price runs up like this, we have a nice swing, okay, and then starts to retrace. Where are we at? We are in the London Open, okay. So when price trades back down into the 162 figure, which is this area in here, this right in here, this area. I'm not going to put another line in, just trust me, you can see it on your chart. This low here, we rally up and then starts to trade back down again. Now, when price trades off of R1, one might think, hey, it's a sell, okay? Now I'm going to show you how this can throw you off. Okay, here is your high to low. You run your fib, right? You got your optimal entry in, right? Here's a nice little sweet spot, right? So you go short. Okay, all of a sudden, price starts to break down. You're feeling really, really good. You got the warm and fuzzies in your tummy, and it's going to go down to the central pivot, then maybe S1, and hell, it might even break S1 and go down to S2, right, guys? No, 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 no. You got to go back to where the long-term perspective is taking you. It's looking to go higher on the daily chart. So you have to look for trades that are in sync with that direction. Okay, and you may be trading against market flow when you do so. Okay, when market flow gets in line with that, then you get these really, really nice trades where it just goes on and on and on and on and on. But until it gets to that point, you have to be nimble enough to trade back and forth, and you may be counter trend basis market flow, but still being in line with the long-term perspective. So yes, this was an optimal trade entry for a short if your directional bias was down, okay? But using the long-term perspective, and I've been trying to get this across to you for the last several videos, you have to simply be looking for the market to be pulled higher. Okay, they're trying to take it higher, and there's old highs on those daily charts that you're trying to retest, and you can't resist it. Okay, so now let's look at that same window of opportunity with that same premise in mind, looking for buying opportunities. Okay, so price runs up, retraces, starts to run again, peters out a little bit at R1, starts to come back. So now we have this swing here. Okay, now we have low to high, retraces, sweet spot, optimal trade entry. Okay, now we are in line with what the daily chart's been trying to do, reach higher. Okay, and buying on this optimal trade entry, price trades above this fractal high. Now what just happened? Okay, when this fractal high right there was broken on this candle, okay, what has happened on market flow? It's now turned bullish, right? Market trades back down, tests R1 as what? It's been broken as resistance. Now what does it become? Support. Now we get another fractal in here. But look at this. Hello. Okay, so this was your London trade for the cable. Okay, now I don't look for my swing trades on market flow with a 5-minute chart. Okay, but when I am scalping, and just for disclosure, guys, I did not trade last night. I just got up this morning and was looking at how the market had traded. I made a pretty good chunk of money with the trades that you've seen so far, but I'm trying to use these examples to teach you how the trades that I do capture, because I get emails that they're stating, hey, I'm looking for this, I'm looking for that, and I can see what you're doing in hindsight, but I get tripped up here or there, and this is what I'm doing. When I'm doing the trades, I'm looking at this type of thing to take place. So yes, this was an optimal trade entry for a short if you were looking to go short on the market. And if you just basically looking at the COT data, looking to find a short, I can tell you, you're not going to find the top in the market, okay, with this situation here. It ain't going to happen, okay? Now, can it happen on something like this? Yeah, sure it can, okay? But I don't think this is it either, because we have to have, in my opinion, it's going to gun for the highs on the daily chart, and it's going to try to sweep those before we really try to break down severely based on the really severe extreme net short position that the pound has for commercials being net short. Now, having looked at this like this, and say you didn't buy here, say you now bought the support now as at R1, okay, what price patterns in here? See that bull flag? Okay, so there's a continuation pattern suggesting that now everything is now going to move higher. Also, we have a swing low with a higher swing low. Okay, well, what is that? That means that this was an intermediate term low, short term low, and even a smaller fractal low, suggesting that we have higher lows in a market that's already shown itself to be bullish. Okay, was unable to get back down to even try to test MR1, which is mid pivot between central pivot and R1, which again, I don't want to drag it up because it'll take all my analysis markers on here away. But assuming that you bought here or even here, okay, let's go and look at if you had, well, the fibs are already calling it up here, but using the same approach, if you drag your 50% level over to this high here, once we break above it on this candle here, we could reasonably expect to see price trade up to this level, and almost got here too, but wasn't able to get there as well. But that's one swing projection that was fulfilled. But going back to using the standard extension, you can see that it was even higher on this one, which was pretty neat. So that was how you could have traded the London Open trade. Okay. Now, moving along, say you're sleeping in. You're not a night owl. You don't like to get up at crazy hours if you're living in the North American East Coast like I do. We go into New York Open. Okay. How do you stock your trades for this window of opportunity? Well, we've made this high in here in London. Okay. Price trades down in Singapore close. Finds a change in what, guys? Opens and closes, we have a change in sentiment. So we've been going lower, made a low, trades up, up, into what level? R2. Okay, tries to sweep above it. But what have we done? We've made a swing, and now we're bouncing up. Well, we are in R2, so that band on price, okay, being pulled away from the central pivot, is at a relatively widely accepted extreme, R2. Now, does it mean R3 can't be reached? Yes, it can, but R2 generally sets up pretty good selling opportunities. So we can now take this swing here and pull a fib. Okay, from high to low. Optimal trade entry in here. Okay. Looking to go short. Stop would be above this high here. Minimum, at least minimum 10 pips. Okay. So if you went short in here, you would actually see what happening? An overlap of the sweet spot right on R2. See that? Right in here. Here's the 62% retracement level line, and then here's the 79% retracement level. So midpoint in here is where we like to see price trade to, using that 62 retracement level as an entry. Factor in the spread a little bit. You can monkey around, try to get fancy if you want, but it won't. It went just a little bit above 79% retracement level in here, and then started to trade lower. Okay, didn't get down to R1 in here, bounced up again, back up to R2, and then finally, it starts to erode. Broke down below R1, trades back up to it as resistance, and trades down to institutional level 161.80. Okay, and I think if one were unable to capture this one here, you had another opportunity to get short here. And just for I just want to check something real quick because I hadn't done it. Yeah, it was it was a little bit higher there. I was wondering if we had fulfilled another fib retracement, but it wasn't as solid as the one from the high. Okay, so going back to that one, using it as the daily high, trading down, pulled back, made a high for the New York session, and then traded lower. But also note that the high of the day was made during what time? The London Open, and it was made within the first 4 hours of trading in London session. So pretty neat tools, repeating over and over again. So again, my point in this was to illustrate the fact that we're not shooting from the hip when we're trading these markets. We're looking for consistently routine setups that happen over and over and over again. And let's just look at a standard resistance trade. Okay, we have railroad tracks in here. We have bullish candle, immediately rejected with a bearish candle. Okay, these are called railroad tracks, and they happen to come in right at R2. And at what time of the day? Well, look down here. We are in London close. Okay, So I just want to make sure you see this clearly. I'm going to draw this line on here, right on the edge of this box. Okay, this will delineate when the London close trade can start to form. Now, if you look real close, this high trading down into this low, trading back up. What do you think that is? Well, if you take the high down to this low, here's the 62 retracement, and 79 is overlapping on R2, sweet spot filled. So there is your London close setup for the cable, and down she goes. Okay, so you can see that there were several opportunities using these crosshair concepts that I've shared with you, and they repeat over and over and over again, guys. I mean, if you go back to the very first time I posted, and I was talking in general terms of how I trade the market, there are patterns that just happen over and over and over again, and they keep happening. You know, I've watched these things for years do the same thing, and that's the reason why you can feel confident and not rush. Don't rush. There's no reason to rush. If you can't get these concepts, grasped firmly, okay, before you start trading live and start trading 2% risk and 15 trades a day and all that, okay, look how many times we've got set up for the day. Okay, we have 1 London Open, 2 New York Open, 3 London Close. 3 opportunities in one day. Okay, now here's what I want you to remember. You only need 25 pips. Okay, 25 pips. When you get a firm understanding of how to trade the market like this, how many trading days do you have in a standard week? I'm not even going to count Sunday. You got 5 good days, don't you? That means you got 5 times 3 session opens or closes. That's 15 opportunities to be patient, to sit on your hands and wait for that 25 pips, risking 2% when you have a full understanding what you're doing, and then you can work towards doubling your money every single year. 25 pips, guys. That's all you need to make 100%, actually a little bit more than 100% on your money every single year. Do you realize with $1,000 over a period of 10 years, that works out to be over $1 million? Have you ever sat down and figured that out? $1 million, guys. I mean, that is a nice chunk of change. If you have a job right now, will you be able to have $1 million from this point on without doing something, routine and consistently? I can probably tell you that you're not working a job that's going to pay you $1 million in 10 years. You're just not going to do it. So my question to you is, if you can sit down and really start to digest this information and do this every single day, whether you trade the market or not. And in fact, I really would like to see those that are brand new, that are still in demo, don't even demo. Don't even demo trade. Okay, what I want you to do is take 1 full week and set your charts up like this. And you can do it in hindsight. If you have a job, come home and eat in time and go over it and set it up like I just did here. Okay, and study it. Look at how the market happens to trade every single day. It's the same thing every day in and day out. These windows of opportunity will create trade setups where you can very easily take 20 pips out. Okay, let's real quick go over them again. Okay, right here is an opportunity to buy. Okay, so if we looked at this level here, we have a low of 161.98. Let's just call that 162. Okay, and let's say you didn't get all this. Say you got out at R2. Okay, well, R2 is at 62.54. Where's 50 pips right there, guys? That's twice the amount you need for the week if you're just trying to double your money. Okay, let's assume that you went in here and you shorted the optimal trade entry. Okay, And let's just assume that you just got filled at the R2 level. Okay, again, at 162.54. And say we're going to monkey around and take the spread into effect. And let's just say we got filled at 162.50 on the short. Okay. Trading down, 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 down. Okay. Well, did we get to R1, which is at 162.16? No. But what was your rules given? Take profits at what? 30 pips. Well, you would have took profits before you even got down there anyway. Okay? So there's the opportunity to make 30 pips there. Now we're on the same day, guys. This is still just today. Now here's the London close. Okay, we got hammers. Come down, starts to trade back up into it. Here's your optimal trade entry again. Sell it right into the sweet spot. Let's assume we're going to sell it and we get filled at, well, say we got the worst case scenario. And say we went to the bathroom and came back and we were a couple minutes late. We sold it at 162.45. Okay? Trades down to R1. Say that's all we're trying to get. Say we're not greedy and we don't try to ride it all the way out. We're going to trade down to R1. Okay? There's another 30 pips. Do you see how easily, even just scalping the market, this is how I scalp, by the way, 20 to 30 pips. It happens every single day. This is how I turned that $400 into $83,000 in just a very short period of time. And it's not that hard if you just really hunker down and look at the market and study how price reacts. If I stop right now, and I'm not doing this to scare you, I'm not trying to, power trip or anything like that, but if I was to stop right now, and if you just took the information I've already given you and just really studied it and became a student of price and looking at time and price theory, which is what we're talking about now, when time and price meet, and everything else that we've talked about in terms of technicals, which is basically support and resistance, okay, and fibs and overlapping pivots and all that, it's amazing how much you can take out of the market, and you can do it without feeling rushed, without feeling emotional. You don't think that if I don't make this trade, what am I going to do? If this trade doesn't turn out to be a winner, how am I ever going to make it? Well, who cares? Let's assume you lost money on the open on London, okay? And you're like myself, I'll take one more opportunity. I'll try to trade into New York, okay? If I would have lost here, I would have been done for the day. Who cares? I got a losing day. I didn't trade today, but let's assume that I had a losing day. What would I do? Well, I wouldn't trade to London because I've already used my 2 trades up for the day. Why do I feel so confident in doing that? Because I know tomorrow I'm going to have that same London Open setup to look for, that same New York Open to look for, and that same London close to look for. Okay? I can't stress it enough, guys. There's so much opportunity for you to grow and make so much money. It's there for you to make, okay? But what's going to happen is you're going to get too excited and you're going to allow your emotions to pull you into rushing. And if you don't get this really planted in your understanding in the beginning, you're going to be chasing your tail and you'll chase price. And how many times have you seen this? Okay, see this candle here? You've missed this opportunity here to buy. You missed this opportunity here to buy. You missed this opportunity here to buy. And it starts to run up. Okay? And all of a sudden it's about right here. Okay? How many times have you seen that and said, oh man, it's going up? Well, heck, everybody's been buying it, so, what the hell, I might as well buy it too. Well, you buy it. And you see this price action, okay? And you're thinking, man, this is going to keep going up. It's probably going to go to 164. Not giving any heed to where it has started trading for the day, okay, and it's fulfilled a daily range. All of a sudden, you're holding on to the trade. It pulls back, and now you're thinking, well, okay, it's just retracing. And all of a sudden, it's lower. Now you're under your entry. Okay, and it starts to bounce up in your favor here a little bit. So you feel, okay, yeah, everything's going well. I was right. It's just this, it's finally retraced. It's going to start moving higher now, and all of a sudden you get this, and then this. Then you're thinking, okay, well, it's going to reverse on me, so I better get out. And then you say, well, wait a minute, it's going to bounce at this pivot level, okay? And then all of a sudden it goes below it and dips just below it just a little bit, because this is marginal, guys, okay? But what will happen is you see you got in here. Now we're underneath a pivot. All of a sudden, fear takes place. And now where are you at? You're in no man's land. You're not in the London Open window. You're not in the New York Open window. You're right here, under the water, because you went short. I'm sorry, you went long here, chasing the price. And all of a sudden, what do? You sell your long. You get out. And all of a sudden, price starts to move up. And then you feel sick to your stomach, because now you're back to where you were in your trade, okay? And then it starts going up higher. Then you jump back in and say, I was right all along. So you buy it again. Price trades up to a pivot, and then it breaks above it here, and you're thinking, yep, I outsmarted them today. And all of a sudden, it starts to dip below it. Now you're below water again. All of a sudden, you just toss in the towel. You can't do it anymore. You throw it. You throw the towel in for the day. You can't trade for today. You got two negative trades. You get out and you start to see it bounce up in here. Same price level where you got in at from the two previous trades, and all of a sudden, you probably buy it again. You buy it and immediately it slams down on you again, and you're thinking, oh hell, this trading stuff's rigged. I can't do it. It's fixed. It's a game. You're never going to be able to make money on. So you throw in your towel again. You get out. You cover it. So you've had 3 losing trades all time trying to buy it, and then you see this move here, trades up to it again. And if you're a sucker, like a lot of new traders are, and I don't mean that to be rude, because I did the same stuff, so I could talk from experience. You try to buy it one more time. So here's the 4th loser. Okay, all of a sudden you ride this whole thing out, because now you're gonna arm wrestle with the market. Nope, you're not gonna get out of it. You're gonna hold on to it, and guess what? You're not even gonna use a stop loss. And all of a sudden, down in here, you finally throw up your guts. Okay, you get out, you sell your long again, and then all of a sudden, you see that, and that's the cycle of a loser. And what I'm teaching you is how to avoid that, guys. So with that, I wish you good luck and good trading.